think, act, and prosper. You are now tuned into the Money Level Show.
Hey, Chad, how's it going today?
Hey, it's good, Daryl. Thanks for having me.
Yeah. I'm glad to have you here. Obviously, we met at the Real Symposium, and it was good just hearing some of your story. I mean, just of you starting Ridgeline Minerals in the pretty much in your own backyard and out of your garage, right? And so I kind of want to dive into that a little bit because this is something like I think about many people that watch my channel. We collect precious metals, we store precious metals, we insure our wealth with it, and we don't know much about the process. And there's obviously these other layers of like different commodities that and metals and minerals that feed our livelihoods. And so what kind of intrigued you to get into this space, and like what was that startup like?
Yeah, well, going way back, I actually wanted to become a geologist from my cousin worked in the oil business back. He was like an efficiencies expert for like Chevron. And every time I'd see him at Christmas or something like that, he'd be like, you should be a geologist. I pay those guys way too much to be sitting on the drill rig and stuff like that. So, at 16 years old, I thought, oh, that sounds good. I'll go do that. And then I quickly realized that it was actually really boring doing oil field geology. I got into school and was like, well, I certainly don't want to spend the rest of my life doing this. Got into mining instead. And it kind of segued from there, I guess. Kind of bounced all over, anywhere from the Canadian Arctic all the way to working for Premier Gold Mines as a U.S. exploration manager for all of the United States. So, got a lot of very highly varied experience. Was part of about 12 million ounces of discovery with Premier Gold Mines over a 10-year period. So really got to see the kind of wealth you could create, by making new discoveries and founding your own companies, by watching the CEO of Premier, found Premier and do really well off that. So that's what was kind of what spurred me to start Ridgeline out of my garage in 2018. I really wanted to focus on, I felt, underexplored districts in Nevada. So Nevada is one of the best endowed, districts in the entire world as far as where it ranks on as a mining jurisdiction. Tons of underexplored potential. And so I founded the company in March of 2018. Was a little bit naive in what I thought it would take to get it up and going, honestly. So it took probably about 8 or 10 months of being consistently turned down by, investors, going to guys that I had met through Premier Gold Mines. And I realized about halfway through that process that it was because I was overvaluing the company. So was trying to, so I slashed my valuation, pre-money valuation down from like 2 million pre-money down to about 750,000. And suddenly the orders started rolling in, and I was able to do our first seed round in May of 2019. So I wouldn't say it was an easy process, and it was kind of a bit of a, learning from your mistakes and stuff, but I did have some good mentors along the way that kind of helped push me in the right direction. And yeah, we went public in 2020, and here we are.
Nice. That's good. So what intrigued you about, like, so you got into mining? Obviously there's money in that field, I mean, people like me
to find it yet, but we'll
yeah. Well, when you find it, yeah, that's correct.
Yeah.
But people like me, like, we go out and we buy precious metals, like, but there's like a whole like different, almost like world of like, exploration to panning, panning to exploration to drilling to mining production, all these different things that lead up to the final product that I store in my safe. Right. And so what was kind of like intrigued you about metals in general? I mean, because obviously, if you get a good job in the mining sector, you hit gold, like you can get pretty wealthy, but like, what's your view on like gold as like, an asset class?
Yeah, no, for sure. I mean, I never actually, my family was a farming family, ranching family back in Canada. I'd never had any exposure to the metal space, my entire childhood, right? None of us stored coins or anything like that. Getting into mining ended up being not something that I initially planned, but as you kind of got into it, you start talking to the bankers and all the people that finance the industry. You realize just how important, the commodity sector is. And it's, like you said, a great store of wealth. Typically when the rest of the world, kind of goes to crap, the economy crashes. That's one of the few things you can count on to actually outperform the rest of the sector, right? So it's a bit of I don't know, you've probably seen it too. It's certainly a contrarian business to be in, right? Like, for you to believe that commodities are going up, you have to be betting that everything else is going to fail or not do well, right? So, I think it's unfortunately an incredibly volatile and cyclical kind of part of the sector. But I mean, when you get bull runs in the business, I mean, it's as good of as quick a wealth creation as you're going to find, I think, anywhere aside from maybe tech, right? So, I'm a believer now. I'm not a stacker, kind of thing, if you want to call it that. But, I'm kind of stacking in my own way, right? I own 4% of Ridgeline. We're hoping we have a pretty significant silver, lead, zinc deposit. So I'm kind of stacking in my own right with direct ownership of that, hopefully someday of mine. So that's kind of how I approach it. But yeah.
That's good. That's good. So, that's like obviously a, different way of generating wealth. I mean, obviously, people, average person or whatnot who may be stacking this to like preserve purchasing power, but you're looking at like, okay, how am I going to keep income rolling in from owning the actual mine itself? Like,
yeah.
much,
Like I fall pretty moderate in the sense that, like, I don't think we're going to see a collapse in fiat currency. I don't, kind of thing. I think there's always going to be a place for the US dollar, whatever it ends up being. But, as far as multiplying my wealth, right, like, which is currently not very much, got to think, I put our entire life savings into Ridgeline, and it's been a tough market right now, right? But I think what we've been able to do as a company, just for an example, is we've partnered with Nevada Gold Mines, which is a joint venture between Barrick and Newmont. We have $40 million worth of deals across 2 projects. We've been able to kind of leverage their exploration in that, if they make a big discovery, Ridgeline stock should respond very positively. And that's how, we can see those big kind of outsized returns, I guess, in that investment. So I'm hoping if our shareholders do well, then I do well as well. Right. So.
Man, that's you said something very key there. You went all in, you put your life savings in this, like blood, sweat, tears.
Yep.
Like, and it just shows like people have to believe in what they're doing and commit, and that was a big commitment.
Oh yeah. No, you got to go all in and do something like this, right? Like, if you're crazy enough to be in the exploration space and think you can find a needle in a haystack deposit, kind of thing, because that's what they are. It's incredibly difficult to make new discoveries. Got to be a little crazy and definitely committed to, I think, to really go for it. So luckily my wife was supportive and she's still very supportive and we're definitely all in. So
yeah, shout out to the supportive wives out there. Yeah, definitely. So when you go about acquiring a project, so from what I learned is that, many people go out and they do, well, I don't know if it's many people, but people go out and they do panning, rivers, things of that nature, or they acquire like mines that may have been abandoned from war times that didn't even reach its full potential or whatnot. So like, how do you go about acquiring these projects or finding them so that Ridgeline can do some exploration?
Well, it's everything that you mentioned and then a whole bunch more too, right? So all of those work, I mean, we acquired our Big Blue project. We essentially found an old copper mine that had been operated in 1916 and 1917, hadn't been operated for 100 years, right? So we very quickly assessed the land package there and said, okay, this has serious potential. Best spot to look for a mine is underneath an old one, right? So that's what we did at Big Blue. In other cases, we can acquire projects from other prospectors. We can stake ground. I mean, there's a whole different range of things that you can do. But what we usually do is I have a really great local team in Nevada. I live in Nevada as well. And we actually go out and we prospect the ground. So prospective mining districts. You just got to go out there with a side-by-side or a quad. You got to hike and map and you look for those surface indicators of these systems that tell you, hey, there's something here. And then you can do rock chips and soils. And we have our backpack drill rig that I filled you in at the Rural Show as well, that are great little prospecting tools to then advance the project to a point where you're like, okay, this is worth picking up. I think it may be of interest to a larger, a bigger company if we make a discovery. And that's what we always look at too, right? Like, you can't there's tons of exciting rock in Nevada, right? There's gold everywhere. that's not a surprising thing. So when we're assessing a project, we're not just looking at it, is there gold on the ground? We have to look at it and go, okay, is it permittable? Is it public lands that are, that we can actually advance? Is there good road access? Is the land package big enough that if we do make a discovery, you actually have the room to make, to build a mine site there? So there's a lot of factors that you need to look at, to make sure that something makes sense. And I think we've been able to build a really exciting portfolio, and we're getting a lot of interest from major companies as well on our other projects.
Yeah, that's good. That's very insightful because just thinking about it, like, the jurisdiction you're in seems very pro mining. I mean, especially like I've been buying some of the gold backs, like just the gold currency,
Yep.
pretty much paper currency, and they're like, you can use them as like tender, in Nevada, and to buy stuff. And so like,
Yep.
it's like, okay, yeah, they got to be pro metals and mining.
Yeah, I mean, Nevada constantly gets ranked as one of the best mining jurisdictions in the world. I mean, I believe, just off the back of my head, if Nevada was its own standalone country, it would be the fourth largest producer of gold reserves anywhere in the world, right? So it's a very pro mining state, and there is a lot of smoke. And what I mean is you can find great little deposits all over the place that'll never be economic, right? They look great on surface. Maybe you take a pan out there to one of the veins and you're going to get some nice showings of color or something like that on these high grade vein systems, but they're not big enough to be an actual operating mine. And that's what you're looking for, right? Like, so you have to kind of be able to see through the smoke a little bit and try to figure out, understand, does this have scale? Does it have the grade that it could actually be something? And then that's when you start taking it and putting real money into it.
Mm-hmm. Yeah, that makes total sense. So you focus on silver, zinc, and what else?
We actually, to be honest, we've kind of spread across the whole spectrum now. We are doing gold, silver primarily, but we also have silver, lead, and zinc projects, and we also have a copper project as well. So we're trying to stay nimble. We're pretty agnostic on the metal. It's more, is the value and the scale there, right? Like, could this be an economic mine? And so whether it's a silver, lead, zinc mine or copper, we're going to stake it if we think that there's value and a potential for discovery.
Mm-hmm. Yeah, definitely. Because I mean, if you discover it, like, just the way people need these resources, and so that's going to be economical.
For sure.
Yeah, that makes sense. Well, you have a presentation for your shareholders, potential shareholders, that you wanted to show. So I'd love to see that.
Yeah, why don't I'll do a high level and just jump in anytime and stuff like that. I can share the screen, do a little bit of doodling and stuff like that. So, but yeah, no, we something that we've really tried to focus hard on is trying to get people to understand what Ridgeline is as a company, right? Because you hit it on the head. There's, you buy, gold coins, and that's being produced by a miner, right? But how does that get found? Like, those miners typically actually don't find those deposits themselves. They typically buy them from companies like Ridgeline. So what we've tried to do is we've built a really big portfolio of projects, primarily focused in Nevada. We have the CRD discovery that I mentioned. That's our silver, lead, zinc, a little bit of gold. And we have $40 million worth of deals with Nevada gold mines. That across our two projects. We have two deals with Nevada Gold Mines, which is the largest producer of gold in the world, joint venture between Barrick and Newmont. $40 million worth of deals there. And what we try to do is we try to leverage our exploration. So we do these, we have 100% owned projects. We also have the deals. So last year, for every dollar that we put in the ground personally, NGM spent $3. Right. So we're getting that leverage to exploration, getting exposure to big projects. And our business model is still very much discovery focused, right? So we have all these projects in our exploration pipeline. That's think of it like R&D for the tech space, or, kind of thing, right? Like we're trying to make these breakthroughs, make these discoveries. That's what adds that huge value. We've already made one significant discovery at our Selena project. That's 100% owned. We're drilling that project right now. That's a pretty exciting silver, lead, zinc, and gold discovery. And we're going to try to advance that to a maiden resource. So that's kind of that level that we would want to de-risk the project to, where we might be able to entice a much larger company to come in and actually buy it, right? So you want to get it to a resource so you can say, we have this many tons at this grade, and there's engineering and metallurgy studies behind it as well. And that's about the level you need to take a project to really hopefully get a big sale or a joint venture. And then on top of
Really,
that,
really quick. So whenever you're drilling and say, you test the soil, you go through this whole process and you start drilling and you find the minerals or the metals. How do you determine how many tons is there? And like,
sure.
what does that process look like for the audience? I mean, we don't have to get too
No, for sure. I can
yeah.
I can keep it to try not to get too into the weeds. The main thing is you need to drill enough drill holes, because a drill hole is like a tube that's about 5 inches in diameter, right? So you're actually drilling a tube of rock down into the ground. You then take that tube and you cut it in half. You send half to the lab and you send the other half, and you keep that other half as like a record. Think of it like a library. You need to drill enough holes to have a high level of confidence that those minerals are there, the tons and the grade. And so, for example, the lowest level of resource calculation usually requires about 300 feet or 75 meters of separation between holes. So if you had a football field, just to keep it simple, a football field sized ore body, you would have to have, I don't even know the number of holes, but they'd be spaced in a grid pattern on 300-foot spacings all the way across that football field. And then you'd be able to say, okay, I have this many tons at this grade, and I think that it's worth this much, right? And that's when you can then take it to a company and try to sell it.
Yeah, so it's an educated guess or estimate. Obviously when you sell it, then they go to production, they have to, but you have like this grid of holes that show like, okay, we hit here, and that this whole area or this whole square footage or whatnot is there's metals there.
Exactly. And, as you get closer and closer to production, you would continue drilling closer and closer spacing until you have drill holes every 50 feet, every 25 feet. That's where you're actually at a level where you can have a mine plan built around it, right? And that's where the miner could then say, okay, I'm willing to put a $200 or $300 million investment into building a mine because I have a good degree of confidence. But by that point, Ridgeline would ideally be long gone, right? We're off doing it again. We want to monetize these things early, and try to get some value, dividend it back to the shareholders, and do it again.
Yeah, gotcha. And so the shareholders benefit when you make a discovery.
Correct.
Right. Usually that's positive news that bumps the share price up.
Yep.
And then when you make the sale of it, the company comes in and buys it at, I think they buy the shares at a certain price or something like that.
Yeah, it entirely depends on the size of the asset and all that. It can be cash, a mix of cash and shares, or it can be a joint venture where you actually partner and they put up the cash to build the mine and you keep a minority interest. I think it is entirely dependent on the size of the deposit, the grade, the quality of the work that you've done. I mean, something to keep in mind is you've probably heard of the Lassonde curve. Have you ever heard of that from the production? Mm-hmm. So the main point of that is, a really famous entrepreneur in the mining side. He pretty much created this graph that said, okay, here's where the different value is in a company through the lifespan of all the way from exploration to production. And it looks kind of like this. So if you had a graph right here, you start out with exploration, the value of the company is quite low. You make a discovery and it spikes. Then as you actually have to put, there's your maximum value at when you make a new discovery, right? Maybe your company goes from 20 million bucks to a 300 million valuation off the excitement of a discovery. But then reality sets in and shareholders realize, okay, these guys need to put in $200 million to advance it from here to production. Well, that's where you have this kind of orphan period where the actual value of the company usually drops quite considerably. Right here, you'll hit a low. That's where you have to finance the company. It's boring. You're doing permitting. You're doing engineering studies. You're spending a whole lot of money, but you aren't necessarily, putting out big splashy drill results. Mm-hmm. But once you then move past that and get into production, the full value of your project's realized. And that's the production phase, right? Once you get into it. Mm-hmm. So you have this kind of peaks and troughs along the discovery all the way to production profile. We focus 100% on this. We want to, we're sitting here right now. We want to get to here. We're not interested in riding it all the way back down and trying to put it in production. So there's all different kinds of companies, right? There's companies that specialize in just being developers. They buy the projects when they're at their low, then they put it into production and they sell it right here to a larger company. So there's all kinds of different companies that you can look into, right? The biggest of the big, they're all sitting up here, right? They're all producers. They're getting maximum value, or at least you'd like to think so, for their assets. And then there's a whole, call it like an entire industry that's built around getting projects from here from discovery all the way to here, right? And a lot of times it has nothing to do with the largest companies out there. A lot of times they're willing to wait. They're willing to let companies spend all that money, risk all that time through this development trough here, and then they'll just happily buy it at a premium when it goes into production. Or if you're in a bear market like we are right now, you're seeing majors coming in and snapping up really good assets for very low valuations. So yeah, it's a whole, it's quite a process, I guess. You see billions of dollars being spent every year just advancing projects to here across globally. It's certainly a tough time right now, right, to raise cash. There's a lot of folks that are happy to just sit and wait and see where the market shakes out before really putting more money back into the space.
Mm-hmm. Yeah, that's what Rick told me. He's cutting checks right now, so like he's, obviously, I mean, a Barrick, can come in, or Newmont can come in and acquire, a lot of projects, and I don't know how that looks for, Rick. I know he said he has a group of buddies and they have, a certain amount of funding and they go in and, I don't know if I don't think they acquire projects, but they acquire shares or something like that. Is that like how the capital is?
They take positions in companies, and guys like Rick that have liquidity have done well in the space. I mean, Rick Rule's been through multiple bear and bull market runs now. I mean, those guys all know that this is the level. This is where you make your money, right? You invest, you buy quality assets, quality companies at rock bottom valuations in the current market we're in right now. And those guys are able to, they have the financial ability to sit and hold, right? So they bet on management teams, they bet on assets, and they know things are going to turn. That old, what is that old saying that, you can, markets can remain irrational longer than you can remain solvent. Well, guys like Rick can remain solvent as long as they need to be, right? So you're seeing a lot of that right now. You're seeing a lot of opportunistic buying, smart money, with people with deep pockets. They're actively acquiring large stakes in companies right now, kind of gearing up for that next run.
What do you think? So obviously, you were at the symposium and Rick invites companies that he invests in at the symposium. What do you think Rick saw in like you or your company that really intrigued him to move forward and invest in your company?
You bet. It was actually this portion of the company right here, this part of our business model. He really likes the kind of prospect generator, leveraged exploration approach. So he really likes the fact that, okay, we're doing big deals with big companies, reducing our overhead, reducing our exploration risk while at the same time keeping upside. And I think everybody that I talk to still loves the fact that at the end of the day, we still have our 100% owned flagship. That is still very much a blue sky story for us that could be a company maker in its own right. So those two elements of the company are what drew him to Ridgeline. I guess I charmed him enough that he liked what he heard. So, that's the feedback I've gotten so far.
Yeah. So it sounds like, there's this saying that, people use sometimes. It's like follow the money. And so so when you're, developing these relationships with huge companies, Barrick and Newmont, who have, probably a tons of capital, and they're seeing something in you to partner with you. And so like that's like a signal for like shareholders, like, okay, there's something here.
I think it kind of validates what we're doing. It's me and two other geologists. We are not a big company. We're not we're I'm working out of my office at home, and we're camping out at the site half the time, right? If this is a small operation, we have a really, really high quality technical team. I think our guys can stand up against any of the big guys as well. And what we have been able to do is we've been able to go into areas where big companies, they can't get the budget authorization to do that, right? It's too early, it's too risky stage. So what we've been able to do is come in, reinterpret these old districts, and come back to the Newmonts and the Barricks of the world with a compelling idea, right? Like, hey, we think this could be a big gold deposit, but we don't have the money to test it. So partner with us. We each win. If they make a discovery, everybody wins. So it's been a good approach. Been able to continue building good relationships across multiple majors and stuff. So we're just hoping that one of these projects hits big at some point for us, and it'd be huge.
All right, cool. You could proceed. I'm done. I'm done for a little bit. I don't know if you got more slides.
Well, you know what? We can bump all over the place, but I think an important thing to point out, is here's our projects. these are our gold projects that are currently optioned to Nevada Gold Mines that are being explored. At least Carlin East and Swift. Maybe Bell Creek will get optioned eventually as well. And then here's our porphyry and CRD. So the copper, the silver, lead, zinc projects that we're actively exploring ourselves. From a cap structure perspective, we've been able to keep a tight cap structure through a really rough couple of years of the markets, right? So we've got 91 million shares out. Management owns 10%. I own 4.2 myself. Little under 2.8 now in cash sitting in the treasury. And some of our largest shareholders, you look over there, Paul Stevens knows Rick real well. That was the original introduction to Rick. We have multiple institutions, corporates like EMX Royalty, $200 million, $300 million royalty company there. And then myself and my co-founder. So tight share structure. We've really tried hard to just, try to do as much as we can with as little as we can in these tough markets, right? Because the more cash you raise at these levels, the more dilutive it is. So trying to keep that tight. And really the main thing you kind of want to point out, I'll just point out two of our projects. We don't need to go through all of them. But what I'm excited about at our Selena project, look here, shows we have, I've mentioned that we have our gold projects partnered with Nevada Gold Mines. Freeport-McMoRan, they own the Butte Valley porphyry, right? They're actively drilling it right now. One of the largest copper companies in the world, probably top 3 or 4, I think. They're actively drilling right beside our project, right? So we already have a potential buyer. If we continue having success, we start hitting some copper as we drill back towards this porphyry. There's every opportunity here to partner with, Freeport or start moving the project forward that way. So really excited to see where that goes. They're drilling the project right now. You looking at the project itself, our original discovery that we made, we actually made it during COVID. We were camping out there in campers and trying to social distance from everybody. So it was a pretty interesting couple months, I guess. But is that going to ever turn up for you? Sorry, the internet's slow. So here's our original discovery right there. That's a silver, lead, zinc, high-grade silver, lead, zinc discovery called Chinchilla. We're actively drilling right here in the middle of the deposit right now. And when you look at what this project, the zone looks like in 3D, you can actually go underground here. We'll show you. Here's a long section showing the zone. Everything in brown is all the silver and gold that we've modeled so far that we've drilled. So we've drilled about 40 drill holes. You're asking what gets you, to that level of confidence. Well, we've put 49 drill holes into the project. We're still not at a resource stage yet, right? We've done a lot of wide space drilling. What we'd like to do over the next 12 months or so is focus on trying to get tighter space drilling and show that the ounces that are actually there. But you look we've hit some incredible intercepts. Like that guy right there last year, that's 6 meters at 1,200 grams silver equivalent, right? Bunch of 480 silver, 18% lead zinc, a little bit of gold. We hit tungsten and copper in the faults, and then we hit high grade silver, lead, zinc when you get off of the faults. So looks pretty cool. For us, we think that we can turn this thing into a pretty significant discovery over the next little while. And a big part of that is just raising enough capital. Here's looking at
really quick, Chad, really quick. Yep. Could you share a little more? So some of this foreign language.
Sure. Sorry, I'm getting a little into the weeds again.
No, you're good. You're good. So I know the G/T, you were kind of explaining that to me at the symposium. I think it's grams a ton or something like that, right?
Yeah.
So could you explain that for the audience as well as some of the other numbers I see on the left, 44.2 million at 123.2 AG. How does these numbers? Yeah, it'll be good to have this on recording too, just so that I can go back and watch this as well.
Looks, I guess it's kind of Greek, isn't it? I'm so used to talk about this stuff. So that's 44 meters. So that's the thickness of the intercept.
Okay.
123 grams per ton silver. I've actually taken the grams per ton. They've been abbreviated. They're explained right here, just so that to save space on the slide. So that's 123 grams per ton, right? So there's, that's roughly 4 ounces per ton of silver. So every ton of rock would have 123 grams of silver in it based on that drill hole. Yeah.
How many tons are usually, for a mine, to buy it, there's obviously tons of rock. Rock weighs a lot of pounds, right? Okay. And so when you look some people may be 123 grams, that's not much, but how many tons are usually being mined or whatnot? Because I'm sure that number's a lot higher for this project.
Well, they can vary dramatically, right? So,
Yeah, yeah.
one of the biggest silver lead zinc deposits in the United States is the Taylor deposit. That's about 150 million tons. So, just a huge volume of rock, right? And their average grade is around in and around 80 grams per ton silver, about 5% lead zinc combined, and a little bit of copper, right? So that's their average grade. It's massive. What we would like to try to find, and we hope we can find, we're trying to prove it now, is somewhere between 20, 30 million tons of much higher grade material, right?
Hmm.
Oh, sorry, I got a bit of a
Yeah,
cold sneeze
you're
there.
good. You're good. So what you're saying is like, if you have 80 million tons, I mean, you're timesing pretty much like over on the left, 153.4. That's higher grade. I assume, well, I guess the 480.5 is probably higher grade. Is that correct?
There and there, those are much higher grade. Yeah. So
Yeah.
those would be incredibly high grade drill results. But yes, you take your tonnage, you times it by the number of ounces of silver, by the percent lead, zinc, etc., and then you can actually start defining how many ounces of silver, how many pounds of lead, how many pounds of zinc are actually in that deposit. So that's what a resource estimate would tell you, right? So we're not there yet. We can know that, okay, we want to target, to be economic, we want to target something that is absolutely no smaller than 10 million tons, but hopefully we can find something 2 or 3 times larger than that with considerable grade. That's the kind of, and that's what we'd have to try to prove, get it out to a resource. And once you get it out to a resource, then it really starts to, folks can really start putting economics behind it and start trying to value the project.
And so a lot of this is like, obviously, educated estimates, right? And pretty much like, so like if me as an investor, and obviously you have different types of valuations, but one type of valuation is asset-based valuation. And so like, if we're looking at the assets, we're like, okay, we believe this company has, potentially this amount of grams per ton, and you can do the math and be like, okay, that's they may be sitting on this many ounces or whatnot that they could eventually sell for a super high price. And so like, that's kind of like what I'm getting from this.
Yeah, no, exactly. And like I said, every single location of your project, the size, the grade, they all factor in to what a company is willing to pay. So just to give you an idea, let's say a company found a million ounces of gold, and it was near surface, heap leachable, good metallurgy, all the things were in the right direction for it. You might be able to get a company that's willing to come in and pay you $75 an ounce, $150 an ounce in the ground, right? So you're not actually producing it. They'll just come in and say, hey, we'll give you $150 million to buy 100% of it. Even if the in situ value, the actual value of the metal in the ground is exponentially higher, that new company coming in and paying and buying it off you, they're taking that risk to then take it from exploration to development and then production. So you'll get, if you want to call it that, a discounted valuation, like a explorer like us, you can forward sell it and get a discounted valuation and sell the project. And it all just comes down to the valuation that you're getting, the net present value of that invest. Is that worth it to you and your shareholders versus trying to hold on to it and turn it into a mine yourself? So there's a million different factors that apply into how a company like us would assess a potential sale or an opportunity to liquidate a project. And I think it comes down to you need your management team to be aligned with your shareholders, right?
Yeah.
You don't have a management team that owns a lot of stock, for example, right? Well, what are they focused on? They're focused on trying to get their change of control, right? And change of control is, are you familiar with, it's essentially if I got taken out by another company, if Ridgeline got taken out, I would get paid 2 years worth of salary, right? Mm-hmm. So but that doesn't matter to me because I own 3.8 million shares of the company. I want to see those shares actually be worth something. I couldn't care less about the change of control. But if you don't own stock, what are you focused on? You're focused on getting a change of control, regardless of whether it's in the best interest of the shareholders or not. That's how you are, as a CEO, make some money. So I think it's important when you're assessing a junior company, look at how much that CEO owns. Have they bought stock? Have they continued to add stock, and are they holding? If they're regularly selling their stock and are not material owners of the company that they're running, it's not really that company is not well aligned with its shareholders, and you'd be skeptical. I'd be skeptical about how they're going to monetize that company in the future because it may not be in the best interest of the shareholders.
All right, that's amazing, man. I'm gonna have to watch this about 3 more times, but yeah, you give us some jewels here. So, what are you going to share on this slide and everything? I know we have a few minutes till
Yeah, you
we
bet.
got to wrap up, but
Yeah.
I wanted to see what do you have to share here?
All I really want to show is, we've got the exploration arm of the company, right? At Selena, we're trying to find a big deposit and sell it. That's kind of the long game for us. But when you look at our other side of our business model, which is the deals that we're doing with NGM, here's how we structured it. They have to spend $30 million US to earn 70% ownership of the project, not of the company, but just the project itself. That 30 million is enough for NGM to come in and prove whether something of value is there. If they spend $30 million, chances are good they've made a discovery and it's actually truly worth something. Then Ridgeline retains a 25% fully carried interest all the way to first gold pour. Now, what that means is that Ridgeline and its shareholders never dilute another share to finance exploration, finance development, or finance the building of a mine. We just get to sit back, keep our 25%. And when that mine goes into production, we would get 25% of the profits, of the net profits, after tax profits from that mine site. So that's, again, how we've tried to shield our shareholders from unnecessary dilution. I'm the largest individual shareholder, so that's my number one focus, right? Is can we make a discovery that meaningfully changes the market cap of Ridgeline? But at the same time, I also want to minimize dilution because I've put my life savings into the company. There's not anything left to continue buying stock every time we do an equity raise, right? I can't go buy 1 million shares every time we go into a race. So the only way that I maintain meaningful ownership in this company is minimizing dilution and getting that stock price up as soon as possible. So
yeah, that makes total sense.
Yeah. So, I mean, that's really it, right? Like, I just kind of want to show the two different styles that fall into our business model, and it really just comes down to managing risk and reducing exposure for our shareholders. Right? We want to make a discovery. We want to have a meaningful stake in what could be a mine in the future, but we don't want to dilute out to 500 million shares to do it. So that's how we've kind of managed that.
Gotcha. That makes total sense. Well, man, where can people find you? I mean, you're on the TSX, and are you on the OTC market too?
Yep. So we're on the TSX under RDG, the TSX Venture. We're under the OTCQB under RDGMF, and we actually have DTC eligibility. So if anyone looks at our trading platform, we actually trade a decent amount of shares every day on the OTC as well, and that's because we're able to interchangeably move stock from the TSX Venture to the OTC. So we've been able to maintain reasonable liquidity in a really tough market. If anyone wants to reach out to me directly, they can download our deck on the website. Has all of my personal cell phone, my email. I'll answer you pretty quickly. Our website is ridgelineminerals.com. And would encourage anyone that wants to learn more about the company, reach out directly. We can set up a meeting just like you and I just had and walk through everything in detail.
All right. So you all heard it from the man himself. You can reach out to him directly. Like, that's just amazing. Just even being able to just access the person who is the CEO of the company. Like, that's not very common.
I'm the janitor as well, so I'm not
Yeah.
I'm not letting it get to my head. But no, I believe really strongly in being an open book about how we're trying to run the company. I mean, you guys are the shareholders, you own it, right?
Yeah, definitely. Well, appreciate you, Chad, for coming back on. For coming on, and then I'd love to have you back at some point, so that we can just see what's happening. Especially if you put out some news or anything like that. I'd love to have you back on and chat about the company.
That'd be great. This is fun. Thanks for having me.